if not paid for by its regular revenue, which includes taxes, the US government, and just like any other government in the world, has to take out debt from corporate and government investors, whether it be other countries or whether it be corporations within the USA, to get money to pay for their stuff. And essentially, this stuff could be anything. It could be Medicare, could be the military, could be infrastructure, could be the Department of Education, basically anything the government can spend their money on. They have to get the money to spend it from somewhere, and if they don't make enough money, which we don't at this point, they don't at this point, I'm from Australia, right? I think the US debt to GDP ratio is something like 120, 130%. So they're not making enough money through their regular revenue to actually pay for what they need to pay for. And so what they're doing is they're taking out debt. And this is why the debt ceiling has been increasing basically year on year for a very long period of time, multiple decades now. And this is when the Congress gets together with the Republicans and the Democrats, they sit together, they make a deal, and they arrange, and they have arranged for a very long period of time to actually raise how much debt, the debt ceiling, the US government can take out so they can continue to pay their bills. Now, what we've seen, and this is not uncommon, it's happened very often, but it is pretty unique this time based on the circumstances that surround it, especially given the macro economy. What we've seen on the 19th of January is the US government actually ran out of money. They hit their debt ceiling. Now, I know that the Treasury did some financial math, and they essentially moved some numbers around, and they've managed to extend the lifeline of the US economy until somewhere in June, most likely June 1st. But by June 1st, if the US government and the US, they don't raise the debt ceiling, essentially they're going to hit the debt limit, and that will cause a default on all debt, which could be detrimental to the US economy. That's something in which basically the US government won't be able to pay back their bills. They won't be able to pay back the people they've loaned money from. And, right now the US government is loaning money at a massively good rate, right? They're a AAA, I don't know what the word would be for it, but they're AAA, I guess, debt taker, right? So basically they've always paid their bills at this point in time. They haven't defaulted yet. They've always paid their bills. And so people are willing to loan them money at very, very low interest rates. Now, if the government did default on their debt, not only would this cause huge amount of chaos, huge amount of turmoil, right? Because things would go under, right? For example, one of the things that could potentially it depends on the situation, obviously, but welfare, you could stop getting welfare payouts, could stop getting veterinary discounts, things like that. Veteran discounts, sorry. Department of Education would take massive cuts. Businesses would go up. Private banks would definitely go under. I've seen estimates online, and again, I don't know how credible these estimates are because I'm not an economist at the end of the day, but I've seen estimates that over 50% of US businesses, specifically in the financial sector, could literally go bust if the US did default on their national debt. And so this is where we get the endless cycle, and this is the endless cycle that's been going on since I think the 1970s, probably even earlier than that. The US government, takes out a lot of money. They're constantly lending money, and they're constantly spending a lot of money, right? But essentially, it's an endless cycle because they're spending a lot of money, they're taking out a lot of debt, they have to raise the rates, they raise the debt limit, but eventually they just keep doing the same thing over and over and over again, and eventually the debt limit is just getting so high that it becomes basically impossible that they'll ever actually pay it off. And so this is where you get into the whole thing of like, well, money's not even real anyway, and it's all just a scam, and the system's bound to collapse, and they're basically just kicking the can down the road endlessly, and they have no real choice, because if they stop kicking the can down the road, we're going to see one of the biggest economic collapses we've ever seen, and for the first time ever, we'll have the United States of America default on its debt, which would massively affect the rates of which they could take out debt in the future, and hence would massively affect growth within the country, and hence would massively affect growth in the Western world, and affect US dollar as well. We could see the entire West take a massive hit, and we could see BRIC nations, they kind of fill their place in that regard. So it's very, very speculative, but this just gives you an idea of how major this actually is. To give you an idea of how major a default would be, the US Treasury bond, which is basically something that anyone can invest in, and a bond is essentially investing in the government, and the government guarantees a rate of return, the best of their ability, right, promises a rate of return they'd give you, for your investment. So say I had $1,000 and I wanted to, make the safest possible investment I could ever possibly make. Now, it's subjective as to what safe is, but historically speaking, and based on history, the US government Treasury bond has been massively safe. It's the ground level for risk in investments. It's the safest thing you could possibly invest in. So if I invested $1,000 in the US government bond and I invested, say, in the 1-year bond, after a year, that the whole idea is they pay me interest on that, and it would be a very, very low interest rate because I'm taking very low risk, and with low risk comes low return. Now, if the US did default on their national debt, which would be, major, they'd be forced to raise, right? Well, they'd be forced into it, right? The bond would no longer be as safe as it was seen before because they'd had default at that point. So the risk would go up and the reward would go up. And so they'd have to pay back more, which means their lending capacity, their borrowing capacity, would be minuscule. It would dramatically affect the growth of the United States of America and the West. Not only does this affect the government, it also affects corporations, right? Because what you'll see is that the US, Treasury bond is essentially, the government bond is essentially the benchmark, and that's the word that's been thrown around many, many times. It's the lowest possible point. It's the benchmark for all investments. So if the US government bond is paying a 3% rate, for example, all right, that means that in order to, entice investors to invest in a corporation, someone like Microsoft, for example, might offer a higher rate, or a corporate bank might offer a higher rate. So if the government defaults, on their debt, and they are forced to raise rates, those companies as well are going to be forced to raise their rates, and that's going to put strain not only on the US economy, but also on private businesses and mega corporations as well, which would affect everything. So literally every single person within the society would be massively affected. But I think we've kind of covered how major it is right now. I think a lot of people already understand that as well. So we can get into some of the more important stuff now. So generally speaking, what we see is the government and Congress in general, right? So Republicans and Democrats, and apologies if I'm getting some of these terms wrong, I'm not from the United States. They agree to make a clean raise, which is essentially there's no debate. They raise the debt limit because they understand it's a necessity. Now this time it's getting a little bit messy, and the reason it's getting messy is because the Republicans are basically threatening not to agree to a debt limit raise, right? A debt ceiling raise. And they want terms to be met by President Biden's administrations. They want things like Biden's, I think he's trying to cut costs for university and school and stuff like that. I think they want to get rid of that plan. They want Biden to agree, and his administration to agree, and Democrats as a whole, to agree to certain things, terms and conditions, in order for them to agree to raising the debt ceiling, right? So for the first time in a while, there's standoff here. I know if you guys are interested, you can Google Kevin McCarthy. He's one of the key Republicans kind of holding this standoff, and President Biden saying things like negotiations on the US's spending should be done outside of the topic of raising the debt ceiling. He's saying that it's inappropriate for Republicans to hold these kind of demands surrounding such an important issue, given the fact that if the US does in fact default, it could have major repercussions, right? That's kind of the whole argument there. So it's a bit political. It's kind of the Republicans versus Democrats. Republicans are threatening not to agree, and Democrats are threatening. They're saying the Republicans are being immature, essentially, and they're holding their ground and saying they should raise the ceiling as they've done always. So it's an interesting political conversation, but I'm not here to talk about politics. I'm just here to talk about the results. So what would happen? We've spoken about what would happen to the economy. Your financial markets, you can probably assume they'd probably go downwards, right? It'd probably lead to massive recession, and the reason being is because during that period of time they'd be forced to raise rates, right? If we had default, they'd be forced to raise rates, which would put more strain on the economy. You guys know by now, if you're watching this video, you probably know higher interest rates equals more strain, equals the stock market goes down. So that's that. But what about things like gold and Bitcoin? Because that's a more unique question. I think everyone knows what it's going to be like with stocks. Everyone knows what it's going to be like with small businesses and the individual. What about things of gold and Bitcoin? Because you could make the case, right? You could make the case, and again, I'm not saying this is true, that during times of hardship, okay, in the US economy and for the US dollar, okay, and for the average US citizen and for basically every single Western country that holds massive amounts of US dollars in reserve, okay, you could make the case that Bitcoin and gold could be seen as alternatives during this period of time. Now, I don't know if that's a particularly strong case. And the reason I don't know is because everything I base my analysis off, okay, in TA, in charts, in anything, is based in historical data fundamentally. Even down to things like ascending triangle formations, ascending wedges, channels, whatever. All that TA, all those charting patterns are based on history because those have historically worked, and so we can assume they're going to work into the future, even with things like charting patterns, right? So that's my whole thing. I base everything on history because history is the only indicator we have. We have nothing else. We haven't seen the US default on national debt before. We haven't seen it. We've never seen it. So if it does occur, we don't realistically know how Bitcoin and gold will react. We can make speculations. Some of the speculations we can make are based on the recent banking bailouts we've seen. We've seen in the banking bailouts a narrative created for Bitcoin and gold in which basically people saw a lack of stability within the United States and their private banking sector specifically, and they've basically seen through the whole veil. And they've basically seen that, oh, this is all a little bit iffy, it's a little bit of a scam, they're just bailing out banks if they run out of money, and they're just kind of basically distancing themselves, or investors are distancing themselves as much as they can from those centralized structures and going into things like gold and Bitcoin. We saw that, obviously this is generalization, we saw that because we saw gold and Bitcoin rise while the S&P 500 and the NASDAQ just kind of went sideways and slightly downwards. So gold and Bitcoin actually had a massive surge. In fact, I think gold actually reached all-time highs, which is huge, and it happened because of that narrative that was formed, and Bitcoin saw the strongest Q1 that it's seen in years, I think since 2014 or 2013. So that was obviously as a result of what happened there with the banking bailout. So you could make a case, and again, I'm not saying this is the case, I don't know what would happen, but you could make a case that in the event of a default, Bitcoin and gold would go up. Now, I don't think that's necessarily a good thing. I don't think we should be hoping for a default, because the amount of suffering and the amount of pain in general that would cause, as I said before, I don't know if this is a true source, but it's very hard to speculate on what would actually happen. But 50% of businesses within the United States going under. We're seeing cuts to welfare, we're seeing cuts to social security, Social Security, which is in welfare. We're seeing cuts to things like hospitals, education, everything. We're seeing cuts to everything if it did occur. So I don't think Bitcoin rallying 20% would necessarily be worth the pain, but it's an interesting thing to look at. Right, the other scenario is obviously everyone's broke and so Bitcoin doesn't go anywhere. All right, and the other scenario is that, well, Bitcoin and stocks are the easiest things you can sell in times of hardship. Selling gold is not easy, okay? If you have gold, it's not actually easy to sell, okay? There's a process, right? Selling Bitcoin, selling stocks, you can do it bang like that, right? So that could be another scenario as well. They'd go down quicker because they're the easiest to sell to people who are rushing to get their cash out of markets. They just sell Bitcoin regardless of the fundamentals. Now, look, what do I think? I don't know. I can't tell you, but I can say we've seen preliminary evidence at this point that the US economy specifically, we've seen preliminary evidence that the US economy and traditional markets going down and people losing faith in the current financial system generally, as of recently, not always, is pretty good for Bitcoin. And Bitcoin's existence, okay, kind of proves that, because Bitcoin wouldn't be where it was today if people didn't doubt the US economy. That's a simple fact. I mean, one of the only reasons it was created, okay, US economy is the largest economy in the world. One of the other reasons Bitcoin was created, it wouldn't exist if everyone trusted the US economy, everyone trusted the US dollar, there's no problems whatsoever, everything's all good. Bitcoin wouldn't exist because it had no use case and people wouldn't care about it and people would never have invested it. People would never have even thought about investing it, because why would they? They trust the US, they trust the US economy. Why the hell would you need an alternative? Why the hell would you need a backup plan? That's what Bitcoin is. It's essentially a backup plan. It's a digital gold. Right? It's a store of value outside of centralized systems. So why would you need it if people trusted the economy to that extent? So I think Bitcoin's entire existence, right, and its entire purpose relies on being an alternative, not necessarily as an everyday currency, but as a store of value, somewhere that isn't centralized. And gold is similar. That's why they call Bitcoin digital gold, but even gold is centralized to a certain extent. So I think that it's hard to say exactly what would happen. As I said, I don't know what would happen, but it would be an interesting time, and it would be a mighty test for Bitcoin. If the US government did in fact default, okay, which, I'm not going to make speculations about whether it's likely or unlikely. You can look at history. Generally speaking, they raise the limit. I don't think they have much of a choice. I think they're going to raise it, right? Unless something absolutely very strange happens, they're probably going to raise it. But if they did default, would that not be the final test for Bitcoin? Would that not be the biggest test Bitcoin's ever had, right? If it did default and Bitcoin went downwards, you could even say Bitcoin's kind of failed to a certain extent. If it did default and it went upwards, you could say Bitcoin succeeded to a certain extent. So it's a massive, massive thing, right? And if they raise the debt limit, it's basically business as usual. We've only ever seen Bitcoin exist within periods of raising the debt limit multiple times. I mean, they even raised the debt limit, I think, in 2021. So, the debt ceiling, I keep saying limit, ceiling in 2021. So it would be business as usual. I don't think it would really affect much. If anything, it'd be yeah, as I said, business as usual. 4-year cycle theory would still be in the same accumulation range, would still end up going upwards. But it will be very interesting to see. We could be approaching potentially one of the biggest tests Bitcoin's ever had. It's unlikely, but it's interesting for sure. But I think everyone who's involved in a financial market should be fully aware of what's going on here, because even though it's unlikely to occur, if it does occur, if default does occur, it would be absolutely groundbreaking, right? It would make history, and the effects would be profound. So everyone needs to be watching this, guys. I'm sorry I can't give you more clarity on the situation with Bitcoin in regards to it. It's just impossible to. We've just never seen it before. You know, you can go on Google, you can go on YouTube, you can see 10 people saying one thing, 10 people saying a different thing. I've seen people say that Bitcoin would go up and Ethereum and altcoins would go down, and it's like, where are you coming to these conclusions from? It's just pure speculation. We have no data to back any of these claims. You know, as I said before, all of our data, all of our analysis is based on history, and we have no history to back these claims. So we can't make claims. We just have to simply observe. One thing you can do, though, is remain cautious and remain, potentially, if you've got money on the sidelines, maybe don't buy Bitcoin yet. Maybe wait and see what happens. As I said, June 1st, it could be happening first week, second week of June. You know, that's not long away. It's under a month. So maybe just sit it out and wait to see what happens, and then sit on the sidelines so you don't have to get affected by it. If Bitcoin shows signs of bullishness, as you know, the debt ceiling, you know, if it isn't raised and Bitcoin shows signs of bullishness, maybe that's when you buy. Or if it is raised and then it's business as usual, really, then you just go back to trusting the chart. So, you know, without further ado, I think I'll end the video there. But it's an interesting topic for sure, and I will be monitoring this closely, and I'll probably be making another video on this as more data comes in and as more progressions are made, because I know that President Biden is holding a meeting with that, believe Kevin McCarthy, it's his name, essentially the biggest kind of hostage holder of this situation from the Republican side. He's holding a meeting on Tuesday, so there should be some resolutions there, some deals made potentially, so we'll wait and see what happens. But guys, thank you for watching the video. I hope you enjoyed. Check out the BitGet Exchange, link below. Check out the Crypto Academy, you want to learn how to trade, and check out the VIP group. All three of those things will be in links below. I'd highly recommend you check them all out. It helps me, it helps the channel, it helps yourself as well, because you're getting access to great content, great things, great exchanges, great groups, whatever. So thank you guys for watching. Hope you enjoyed. Catch you in the next one.